I don't know if you heard this. The guy who runs 1-800-Flowers says that we're going to have a good Christmas after all, and all because the election was resolved quickly, easily, without much fuss or, craziness. And that's the wind at our back for the economy and a cozy Christmas. Scott Martin, Kingsview Asset Management CIO. I wonder what he makes of that. Scott, what do you think?
Speaking of cozy, Neil, did you get the flowers I sent you, my man? Maybe that is what's helping the stock these days. I'll tell you, 1-800-Flowers, though, needs a boost this Christmas, because if you look at the stock over the last several years, it's been a little bit rough for that company. Probably true, though. I believe that a quick, resolution in the election, Neil, was good for every company out there, good for every really American if you believe in the democratic process. I know some still don't, but certainly it's largely good. So a lot of companies will probably make these comments coming forward, but the reality is, Neil, I think the economy was good enough without maybe even a quick resolution. And therefore, 1-800-Flowers and some of the other companies that are out there that are so counting on a big Christmas season are likely to get it either way.
So what you're saying is you like what 800-Flowers is peddling. Flower peddling. Okay, it's basic cable, Scott. One of the things that interests me about that is, and I know you often remind me of this, my friend, that the markets are more uncertainty. And the last thing probably the markets really wanted was a long, dragged-out election fight or waiting for it to be resolved with final figures coming in from wherever. And that we're safe for the time being. We still don't know the makeup of the House. It could tip Republican when all is said and done in the end, so whatever. I'm wondering what you make of that. And is the next uncertainty they want to get over the prospect of rate cuts and how many we get? Most are expecting a quarter-point cut later today, maybe another similarly sized cut next month. What are you looking at?
Well, I can't believe the rate cut picture, my friend. I mean, talk about a rate cut that went the wrong way. September's rate cut, 50 basis points, and the 10-year note is up, what, about 40 or 50 basis points upward since? So that didn't work out very well. I think the Fed should do nothing, man. I think that tells you that the Fed is kind of on the wrong side here. So I don't believe it's so much rate cuts going forward. I think it's policy. It's trade policy, it's tax policy, it's immigration policy, and that's something that Trump has been very kind of clear on, that he's going to reverse the trends that the Biden administration set forth, and therefore I think that's why the markets are taking this so much of a sanguine way. Now, how much that goes through, how quickly, how aggressive he gets with those policies is one thing, but the fact that there's going to be a change going forward is something the markets are pretty excited about.
Well, the markets, obviously, we always hear these animal spirits have been unleashed, but that it also, some of the bond vigilantes, their spirits have been unleashed too, potentially. I mean, if you look at the backup in rates right now and the notion you can't have both going on very long, can you?
No, you shouldn't. And the odd thing about rates getting back, say, higher is that that's probably more of a testament to what I believe is going to be a higher inflationary picture, which means, again, the Fed should not be cutting rates here. And secondly, a stronger economy. And so that's actually, Neil, a normalized kind of thing that everybody's kind of freaking out about, because we got so used to rates being so low. We got so used to just money market rates and everything being so low, so that the only game in town was equities. So now bond rates are actually going to be paying something again for once in the last couple of years. So I think the reality going forward is, as long as rates don't get out of control, that will be great. But I would expect rates to go higher here, just in the fact that the economy is going to get stronger.
All right. So it's a mixed blessing there. Thank you very much, Scott. Scott Martin, following all of that.